Welcome to One Version of the Truth. This is a show about how leaders make decisions in complex environments where data is imperfect, incentives are misaligned, and there's rarely a single objective answer. In each episode, I sit down with operators, advisors, and executives to unpack how value is actually created and how data and AI can help, distort, or get misunderstood along the way. I'm your host, Taylor Culver. I work with senior leaders to connect data to real business outcomes. I started this podcast to move past theory and frameworks and get the judgment calls that actually move markets and companies. Today is Season 1, Episode 2. I'm joined by Ajit Agrawal, who has spent more than 2 decades inside financial services, including Morgan Stanley and UBS, building data-driven research capabilities. Today, he runs AKA Nomics Inc., where he turns macroeconomic data into equity signals. In this conversation, we explore a hard truth. Data is not necessarily the same as signal, and signal is not necessarily the same as alpha. We talk about what makes data investable, why most licensing opportunities are smaller than companies may expect, how hedge funds and financial institutions actually evaluate edge, and what AI may do to flatten the playing field in the future. If you work in data, investing, or strategy, this episode forces an uncomfortable question. Is what you have actually valuable or just available? Let's get into it. Good morning. We're here today with Ajit Agrawal. Ajit, could you introduce yourself, please?
Yes, nice to see you, Taylor. I am Ajit Agrawal. I was at two banks in the last 20 years, focused a lot on data and how data can be used in stock and macro research work. Most recently, I have my own startup company thinking about how to use economic data for trying to pick stocks or think about the economies. Prior to that, I was a consultant in McKinsey and Company for 6 years, and I have a PhD in computer science prior to that.
Okay. So for a lot of people, they may not know how financial organizations use data. Is it for trading purposes? Is it for economic research? How is that being utilized within these type of financial institutions?
Well, financial institutions are a very big place with a lot of different verticals in it. So, for example, if you look at a universal bank, they have an asset management group, they have a trading group, they have a research group, they have banking, etc. And each of them uses data in very different forms. But the part that I was most involved with has to do with stock picking, which is mostly on the sell side, which is trying to understand how stocks or markets might be behaving more as a research organization. And then that translates into how trading groups or asset managers, or more recently hedge funds, try to use that data in trying to pick stocks or pick their positions on the stocks. And that's one of the primary ways that I think new types of information is directly relevant for the financial markets.
Well, how good is data at actually predicting the future? You know, people say that correlation isn't necessarily causation. Are people able to actually extract signal from data sets?
Yeah, it's a very complex question. The answer is yes. Of course, they are able to extract a lot of a lot of value from data. Data is primarily the way most of the financial research is nowadays being done. But there's many steps that the data has to go through before it really becomes meaningful. In a way, when you're thinking about the stock or the markets, there are a lot of people who are trying to gain an edge on the markets. So the question is not so much about the data, is about what you do with the data and how does it help you inform your position better and faster than somebody else. And that's the most critical component of the use of data. But yes, data is quite valuable. Almost every hedge fund uses it. Almost every research organization I have gone to uses it. But it's a transition from doing more traditional work to thinking about more data in more recent terms. Yeah.
Okay. No, I always wonder, right? And tell me this. So is it people jumping into the data sets itself that creates that signal, or is it a thesis that they bring to the data set, or is it a combination of both? How does that? Where does the rubber really hit the road?
Yeah, I think it's a combination. There's very wide range of people how how they make their decisions about stock picking. Some people have a thesis. So, for example, you might have a thesis that AI is going to change the world, and you might look to support that thesis with information, with data flow, etc. And there are other people who do not have a thesis. They're simply trying to take advantage of the data in order to extract meaning out of it. And there's a lot of high frequency funds who are doing that. There are a lot of quant funds doing that. There's more concepts of quantum mental funds that are merging the concept of quants, which is just looking at the data, versus fundamental, which is thinking about the thesis and thinking about which companies are going to outperform, etc. So there's a whole range of outcomes for people as to how they think about the world.
Do you have an example that you can publicly share, or something kind of anecdotal, or is that pretty proprietary?
No, I mean, like, in the last 20 years, the kind of work I do, it's from even, 10 or 15 years ago, which is, there are, Google Trends had just come out in 2006, 2007. And, you could look at Google Trends to understand what's happening with different companies. And at that time, we did do a lot of work when I was at Morgan Stanley, thinking about how different industries and companies are competing with each other, and which ones are getting more traction by looking at their sort of search patterns. Of course, these search patterns have changed, and there's a lot more you have to think about it. But at that time, one could, and you could look at across the country which regions that they're getting better at, and where the competitiveness lies. So there's a lot of information you can gain from looking at the data that you wouldn't otherwise if you're not using it. And more recently, I mean, in the last 10 years, I spent a lot of time looking at the macro economy, especially in the US. And the few things that the world focuses a lot on is inflation and growth. And when you look at inflation, the world is trying to understand where the inflation is, where it's going. And by looking at the data very closely, one can start to read the tea leaves. So, for example, if you're looking at inflation, you're looking at, let's say, grocery prices. You can look at what the different grocers are pricing their items at. And if you do have good data sets to analyze that, you can get a pretty real-time view of that, which others do not have. So there are definitely ways you can use data in different positions. Yeah.
What's interesting about what you shared about Google Trends and inflation data and growth data is that's publicly available information. Are you saying that these financial institutions can get real signal and in turn perhaps alpha off of publicly available data?
Well, almost every data, in a way, I think is publicly available. Some are publicly available with zero cost, and some are publicly available with a higher cost. But I do not know of many hedge funds that lock up proprietary data because of compliance and other reasons. But so almost everybody insists on having data that is being shared with other people rather than a proprietary, because then that lands people into trouble with the compliance officers. But uh, but what happens is that more and more data is being made publicly available, but there's a cost to it. You can pay for, the data I produce in my company, or you can pay for, 500 other data vendors that sell that data. And I think that pricing is the barrier sometimes for funds. As the prices go up, fewer and fewer funds can afford it, and that gives them an advantage. Second would be the ability to analyze that data would also change drastically from one fund to the other, because some are smaller funds and don't have as many resources or don't have the right skill set. So those are the ways to differentiate from data into the use of data into positioning.
Yeah, very interesting, because something that I think data leaders wrestle with is their CEO or board is coming to them and saying, we've got this treasure trove of information within our business. Why don't we just go license it to a hedge fund? right? And I've heard this firsthand as a data leader and through numerous companies that I've worked with. I mean, how real is that market? Are organizations just missing the mark by focusing on their core operations and not licensing their data, or is there a real play there?
I think it's a tough question to answer generically, but the answer is yes. There is demand for such data in hedge funds because that's their operation. They want to make money and they want to differentiate and they want to be able to use the best information because it's a very, very competitive market. So there's definitely value to be had in trying to sell the data to the hedge funds. I do think that many of the data sources that come into this space have other uses. Primarily, they come from operational uses. So if you're trying to create data, for example, of grocery and what you're selling the groceries at, there's really there's another market for it, which is all the grocers want to know what the competitors are pricing themselves at, so they can utilize it for their purposes, and that's a real business that helps them improve their operational performance, and so that market also exists. So sometimes much of the data that goes into the hedge funds is really exhaust, which is the data that's being produced by other people for normal use, but it can also be used for financial use. Are there lots of data being produced primarily for financial use? I think there are some, but I would assume there's a lot more use in the operational perspective where you can improve the performance of the companies
So
more than that with hedge funds.
So they're looking at the same industry data sets that different industries are looking at. Pharmaceuticals are looking at IQVIA, looking at prescriptions, right? You've got CPGs looking at Nielsen and Circana, trying to figure out what the pricing is per channel and so on and so forth. They're just looking at that same information through a
Yeah,
different
and
lens.
I think that I think is the best model, especially for when trying to sell into financial services, because there is an operational use for it in other places, and this becomes an exhaust use for that, and so there's additional probably capabilities and money to be made from there. So.
Well, let's say I'm a Fortune 1000 company, right? Would my data be valuable? Is there an opportunity to go out and license my data, which might just be a small subset of the industry, or do I need to have a certain amount of market share? When does my data become relevant as an organization?
I think again, it's a really a function of what value does that data bring. So, for example, I give you just a simple example. For example, you have data on how many homes are up for sale, right? And that's information that's good for it's being used by people to scout for homes, but it's also good for understanding what it does to that market. Are more homes selling? Are they selling faster? Are they up? So that affects a lot of building products, right? The people who are providing services, when the sale occurs, that's when a lot of services are being provided in home building and in home products and many of these things. So that data becomes relevant to understand how that might impact those stocks or those holdings. So if that data that you have for a particular company has meaningful implications to either your competitors, that industry, or the economy as a whole, it becomes valuable. But there's a lot of very, very narrow data sets that have pretty good uses as well. So
It's interesting. So I would think that these financial services firms could make millions of dollars off this information. I'm guessing I could license my data for millions of dollars too.
yeah, if you can find the right use for it. I mean, I think it's a little bit of a misnomer that every piece of data is worth millions of dollars, because um, I think there's a lot that goes into deciding what value it might create. At least the way I think about, for example, we track 200 companies or so, and data on them. And most of the hedge funds, etc., think about portfolios and where they can create values. And they have limited amount of capacity and dollars to spend on any one particular company if you're a discretionary fund, you may have more money. If you're a quantitative firm, relative to the other companies, you might less. So it depends upon what the use of that information is, how much incremental value it provides, not the value it provides. What's the incremental value it provides? Because each of us have a lot of knowledge already about the world and about the industries, the economies that is being made available publicly. So if you have any new piece of information to add, one needs to determine what's the incremental value. And then once you understand that's what's the incremental value, somebody is willing to pay for it, they have to use it in a way that they can pocket a lot of the value themselves. So, my rule of thumb is if you're able to help a client make 10 to 20 times more than the cost of the data, then I think you're in good shape. Yeah.
I love it because I figure if you're licensing this information and you go to a different, let's say a hedge fund, for example, um, they might not necessarily tell you how valuable the data is because it doesn't really serve their interests from a pricing perspective. Um, so I like what you're sharing there about kind of a good gut check is 10 to 20 times what that
You
data
can
is.
do a little bit of reverse check as well. Like, the
Okay.
way we think about it from our data is we say, okay, we are selling it to a hedge fund that's going to use it for creating a sector neutral strategy. Let's assume that they put X amount of money on that strategy. Then this is the amount of value that they can create for their investors. As a management company, this is the amount that they will make, and that should be at least 10x of what we provide to them because they are the ones who are paying us. So you can reverse engineer into it, and not always that's easy to do because you have just new data set. You have no idea what's the value it has, what's the incremental value. But if you are far along that food chain to try to understand and create it, then it's somewhat easier to do. Not easy, but easier to do. Yeah.
No, it's super insightful. I mean, going straight to how does their business model work? How much money are they putting behind the thesis? How
Yeah.
much does data support that thesis? Something I found interesting in the space is that there's not this one magic data set that's useful. Sometimes these firms are using bundles of data sets to get signal. Is that something you've seen in your career as
Yeah,
well?
yeah. I mean, this is normal statistics actually. That if you take one piece of information and your error is some, you take another piece of information that's uncorrelated, your error drops, right? It's pretty standard stuff, and so most of the firms are looking for uncorrelated pieces of information because that allows them, better statistics and better returns on their risk. Um, it is standard thing. I think most of the people will want to use multiple data sets as much as they can. Yeah.
So if let's say I'm a chief data officer at a billion-dollar company, I do have an interesting data set and may have some signal. What's the best way to get it out to the open market?
Hmm. Uh, I think the idea would be, well, there are two types of markets. One market is, operational use of that data, like other companies, competitors, data sets that who could use it. So if you have data on hotel pricing, hotel companies might be interested in that. That's one use. And in the financial services, which is where I'm used to, certainly, there are a lot of people who are trying that, and there are conferences that they can go to present that kind of information and see what's the traction for that. But more importantly, I think trying to understand what's the value of the data. That's the first step of that. And once there is a semblance that there's good value of the data and that you can help differentiate somebody between either stocks or positioning for the stocks, then I think definitely there's a place for all of this to go about. Yeah.
Interesting. So something I found in my own personal experience was that when I went to go license data, we had an interesting use case. We were forecasting an economic signal. We were looking at labor statistics, for example, and I was surprised to learn that even though we probably had, I don't know, 10-15% of the market, that was still statistically significant to the economic buyer. But I also found what was interesting and a little bit disappointing was that that data set wasn't going to net us millions of dollars, even though it was an interesting signal. It was more of like a $100,000 opportunity for the business at the time, which we ultimately kind of stepped away from because it was a distraction from core operations. But is that a common experience for organizations looking to license their data? Because I think there's this big expectation that the data is worth billions, in the hands of the right person. But I personally have not experienced that. I'm just curious if that's something you've seen it as well.
Yeah, I've been in the business of doing this now for the last 3 years in a startup, and that's not been my experience. That people just come in and say, here's $1 billion for you because you have this amazing data set. I think most of the clients are very very particular about how much they pay for it, and especially the big clients are able to dictate their prices quite a bit. And I think the value to them is something that has to be made abundantly clear before they are willing to shell for it. But I think data sets range between what I'm aware of between $10,000 to 200, $300,000, and there are exceptions will be above that, but that's the normal range. And if you take the example of how many hedge funds are there, you can cut it down by the number of people that may directly be interested in it. Then you can start to market size it, but it's certainly not billions of dollars for any one particular company. I'm not aware of a single company that has that business. Yeah.
Well, I think that's something hard for data peoples to kind of data people to deflect on, right? Is their CEO says, "Hey, let's go license our data. It's worth millions." That can be a really long, protracted process to where it doesn't end up anywhere, right? And I think if you could just go back to your leadership team and say, "Hey, look, maybe $250,000, where does that stack rank in the list of corporate priorities right now, like buying this business or hiring this salesperson?" It's probably not that high, right? And I think that's kind of an aha moment for data practitioners who've been a little bit further down this path. And it's kind of eye opening because it's almost like the focus for a data person should be on internal productivity and operational improvements, and that would drive considerably more value than just going out and licensing data to these financial institutions. Is that a fair understanding of what you see out there as well?
Yeah, I think that would be the in the relative positioning that if you can drive internal value or you can drive operational value for other people, that may be the first place rather than using the exhaust data for other places. But that said, there are many companies who do this and do this successfully. And if you read the pundits who are projecting the amount of money that's being spent on uh, alternative data by hedge funds, they've been growing quite rapidly over the last few years, and they continue to grow. So the question is, can you get a piece of the pie, and is it worth it for you? That's a decision every firm will have to make.
What is the size of that market? I'm just curious.
I've read anywhere between it being, I don't know, 600 or 700 million today to going rapidly to a few billion dollars, coming up.
That's a small
But that's
industry.
spread across a lot of different data sets, not the big ones like established ones, but some of the upcoming ones. So it is not a small market, but it's a diffused market with a lot of players and some companies buying a lot of data sets and others buying a few, and almost everybody dipping their toe into the data world. So the demand is certainly there. And there are close to like 6,000 hedge funds, and
Okay.
there's many more asset managers. So the demand for all of this is certainly there. So.
It's there and growing. So AI, we kind of touched on it earlier. Where are you seeing AI in the data licensing world? Is it synthetic data sets? Is it in the analysis itself? Is it in the acquisition process? Where is AI finding its way into this business?
I think it's probably early world. The part I'm not fully exposed to everything in the AI world, but the parts that I've seen is In the stock picking world, one relies a lot on company filings and company earnings, because that gives you the grounding for where the company's performance is today and where it might be going. So there's a lot of use of the company filings, and there have been thousands of companies, multiple decades of their filings, and all of that data is now getting ready to be unlocked through AI because it's easy to access them. They have always been available in one form or the other, but now people can do much more with them and much more rapidly with them. So that's definitely one place that has occurred quite recently, and there's so much demand for that. And there are other ways. Most of the people are finding ways to query the world in understanding what is happening in different parts of the world, different parts of the industries, in order to understand a company and understand. And for that, they are relying a lot on AI synthesizing information in a much more rapid way than they could do before. So that is certainly a pretty active use of that. I'm sure there are many other ways, but that's what my experience is on. Yeah.
Okay. In your experience, you probably evaluated one or two data sets more than the average person. Has there been a data set that you've passed on that looked great, but it ended up not being anything worth talking about?
I mean, there are lots of data sets we have looked at and we have passed on, and data sets also change a fair bit. So, for example, there are data sets that tell you about um, different aspects of the economy. So, for example, when we were looking at China economy, we were looking at credit card data in China 10 or 12 years ago. And that was quite good at that time. But as times changed and the use of credit card dropped and other forms of payment really took off, that data set started to lose its value pretty rapidly.
Interesting.
So that's an example of where you could start with something that is valuable, but as the business changes, it, it may have a completely different outcome.
Gotcha. So there's almost like an inherent decay in information and the timing of it matters. There's not this just
Yeah, it was less to do with decay in the information. It's more the information itself was not keeping in tune with the times.
Do you think AI has changed much how funds are evaluating cleaning data or generating signal? Or do you have much purview into that world?
I don't have a great amount of purview on it. I do hear a lot of the funds are spending on time with AI, but I do not know how inbred it is to their process at this moment. Yeah, so there's a lot of experiment. I'm not fully aware of all their uses yet. Yeah.
Because I am kind of quietly wondering, will AI create more alpha, or is it just going to accelerate convergence and create a more efficient marketplace? Do you think it's going to create arbitrage opportunities, or is it going to create a more efficient market?
It certainly would create a lot more efficiency because more and more people can do the kind of research that's being provided by experts today. So as a result, if more people have access to that information more quickly, it should make the markets far more efficient in my mind. Now, the people who do uh, spend a lot of time in the markets, they will also find ways to use this ahead of other people or differently from other people. So both could be true, but certainly markets should start to get more efficient.
And I appreciate you sharing all this. Tell me if people want to learn a little bit more about the work that you're focused on now, could you explain it a little bit for the audience?
Yeah, the work I focus on is really taking a lot of the macroeconomic information around the world continuously as they change and use that to say, what does it mean for different companies? Which companies are going to outperform and which companies are going to underperform the market expectations? And we do that for a few hundred companies. We are looking to expand it a lot more rapidly, and then offer it to funds, both discretionary funds who are trading those stocks that we are tracking primarily in the cyclicals area, industrials and materials and consumers, as well as to quant people. Yeah, that's what we are trying to do. So if somebody wants to get hold of me, I'm running this startup called Economics Incorporated, www.economics.com. They can get hold of us there or through my email, etc. Yeah.
Wonderful. All right. Well, Ajit, I really appreciate your time today and walking through all things data licensing, macro, financial institutions, and where the true value is. Super helpful. Thank you very much for your time.
Thank you, Taylor, for taking the time to speak with me.
And that's it for this episode of One Version of the Truth. If you're interested in how leaders turn data into real outcomes, you can follow the show wherever you listen to podcasts. I'm Taylor Culver. Thanks again for listening.